Yeah, so I just wanted to give a shout out to Laila, who is like the secret sauce to the XSITE success, who is in attendance today. Laila is the regional manager for First Communities Management, and she is a key part of the team of everything we do with the assets that we procure in the Southeast, especially in that Colombia market. Her and her team have been doing an amazing job with the view at St. Andrews, which is one of our assets in that market. And we are very excited to go into this one with her because um, we know some magic is going to happen with this one. So so in respect of everybody's time, I'm going to go ahead and get started so we could go over some of these questions and answer any questions that you may have. Again, welcome everybody to the third webinar presentation for the Land Bank Lofts opportunity in Columbia, South Carolina. My name is Leslie Awasum. I'm the Director of Operations at XSITE Capital Investment. I normally don't do these presentations, but because our CEO, Dr. Julius Oni, is running late, and I'm going to take over and try to hopefully mimic him, but I don't know if I'll come 5% close to what he does. I'm also going to take advantage of this and introduce other members of our team that are on the call. We have Mr. Braden Hay. Braden is our amazing executive assistant. And
hi, everyone.
if you, yeah, and if you have fill out any of the commits, or if you as an investor, you're going to be doing a lot of interactions with Braden. And I also like to introduce my co-founder and director of acquisitions, Mr. Tenny Tolofari. We call him the Tenacious Tenny. He is responsible for bringing this property to light. And I'm going to also introduce our marketing specialist, Ms. Zaina Barakal, who is on the call as well. Zaina is the new addition to the team, and welcome everybody. And without further ado,
everyone.
I'm so glad this guy is here. Our co-founder, CEO, and chairman himself, Dr. Julius Oni. So I'm going to pass this over to Dr. Oni to take over the presentation.
Yeah, thank you so much for that wonderful introduction, brother. I hope everybody's super excited to be here. So it's good to see all the names in the webinar list. Super excited to see you all, and certainly looking forward to taking your questions and answering those questions to the best of our abilities. We are obviously super excited about this particular opportunity. Just if we weren't excited before, we are even more excited given the responses we've gotten from our community of investors. And if you are not, I think most of the people on the list are familiar with us, but just in case you are not, we are XSITE Capital, and I'm Dr. Julius Oni. We partner with our community of investors to buy cash flowing multifamily assets, and Land Bank Lofts just happens to be the latest effort in that quest. So Braden, if you want to just pull up the Land Bank landing page so that we could kind of toggle through that somewhat. That may be a good way to start.
Would you want to play the video or just scroll through the landing page?
There's just kind of, I would just want to kind of go to the landing page and just, highlight a couple of things about the deal for those that may not be familiar with it. So as you can see on the screen there, that's our landing page. And certainly feel free to check out that landing page. We'll post a copy of that link in the chat right now. So Braden, if you could go ahead and do that.
Yeah.
This particular forum is not meant to be a formal presentation of the entire deal from top to bottom. Again, we are not trying to relitigate the importance and incredible opportunity that this deal is. This is really an opportunity to just answer some of the most frequently asked questions that we've encountered in the presentation of this deal. And certainly, to take some of the questions live from those of you that are part of the team or part of this call today. So without further ado, let's just dive right into it. Can you please pull up the actually, you know what, Braden, let me share my screen and pull this up. And
Okay.
if you make me call so that I could share my screen, that would be fantastic. Awesome. We'll pull that right up very shortly. There we go. I hope you guys can see my screen. Great. So, can you see it?
Sir.
Fantastic. Great. So I'm just gonna quickly just kind of go right into the actual presentation, just to kind of go over some overviews. Obviously, everything that we say in this conversation is just for educational purposes only. We are not formally selling any securities, so please feel free to check with your CPA, with your licensed financial advisor or licensed professional to make sure that everything that we say is confirmed and that it works out for your portfolio. I see that some of you on the call already are existing investors, and I thank you for your incredible investment. I think you're going to be very happy to do this, to go on this journey with us. And for some of you, I think you may still be thinking about investing in this deal and you want to maybe have some additional questions answered. So once again, disclaimer, check with your licensed professionals to make sure that this is a good fit for your portfolio. We certainly think it is, but you still have to do that due diligence. After you've checked it and you've invested with us, now you can sit back and relax and let your money do the work for you. So once again, this is Land Bank Lofts. It's a 113 unit apartment community located in downtown Columbia, South Carolina, where I'm acquiring it for about $17.45 million. We are raising about $5.75 million from our group of investors and planning to own this particular property for about 7 years. We are projecting, based on very conservative underwriting, that this property is going to yield about 19 to 25% in average annual returns. It's going to yield about 2.3x to 2.7x in equity multiples. And just to put that in simple terms, you invest $100,000, you're potentially going to get about $230,000 to $270,000 over the span of this business plan. We are buying this property at a cap rate of about 5%, and we could explain why we are buying it at such a good basis later. So just to kind of, I'm not sure, this may be a little too small. Let's see, is that better? I think that's probably a better.
This is perfect.
Fantastic. So the location is one of the things we love about this deal. I mean, it's perfectly located. It's located like smack in the middle of Columbia, downtown Columbia. It's just steps away from the Columbia state capitol, because Columbia is the state capital of South Carolina. It's just a few blocks away from a $1.3 billion development that is bringing a lot of economic activity into that area. It's right next to the heart and business district of Columbia, South Carolina. It's also right across the street from one of the biggest employer in healthcare, Prisma Health. And we actually are lucky to have a lot of the employees in Prisma Health living in the building. And also the folks that live in the building have an average annual household income of $113,000. That is almost unheard of in a place like Columbia, South Carolina. We own a property about 12 minutes away from this property. And in that particular property, the average annual household income is about like $50-something thousand. So this is a really good tenant base that we have in this building. So they are not going to be significantly affected by any potential downturn in the economy. So it's a beautiful apartment, mostly 1 bedroom and 2 bedrooms, in some studios. Our business plan really is to put a dog park in, a dog wash station, renovate the pool house, put in some smart upgrades, including some smart locks and some smart thermostats, add some self-storage in the building to supplement the storage of items for the tenants. And we are going to repair one of the elevators that is a little spastic right now. So the primary business plan really is to keep it for about 7 years. And once again, it's an average annual returns of 19% to 25%, with an equity multiple of 2.3x to 2.7x. Almost all of the comparable properties are close to 100% occupied. So that just tells you how amazing this property is, because there's so much demand in downtown Columbia. And when properties are 99%, 100% occupied, that just means that they're not even really at the top of the market yet. That means we're not generating market rents yet. And compared to even this properties, our property, I just want to kind of compare, the rents, our property rents. So Land Bank has an average rent of $1,158. And some of the comparisons, 1,200, some are lower, 1,200 here, definitely higher. But when you go to the next page, 1,300, 1,600, 1,600 here. So we are kind of like relative closer to the lower end of the market when it comes to the runway to actually increase rent and increase revenue on this property once we've added significant value to it, which we expect to do in the first 3 months of getting this property. We're going to split it 70-30 between the LPs, the limited partners, the equity partners, and the managers. And you can expect a preferred return of about 7%, meaning you're going to be getting 7% of your expected 19 to 25% of average annual income. 7% of it is going to be cash flow distributed to you on a quarterly basis throughout the year. So it's going to be 7% divided into quarterly distributions. Obviously, the capital stack is usually debt first. You pay the debt first, and then you pay your investors, the limited partners. It's only after that that the general partners then get paid. This is just some of the highlights. We could talk a lot more about the population growth, the current rent growth in the city, which is about 10% per year over year. And we could talk about the proximity of this property to all of these attractions, including hospitals, hotels, the USC School of Law, the State Capitol grounds, which is number 8. This is the property here. So literally just a few blocks away. This is the $1.3 billion development project that I was talking about earlier. University of South Carolina has a $3.7 billion economic impact and hires about 1 out of 9 jobs in that area. The School of Law is literally a few blocks away from this building. Lots of companies that are part of this, that are moving or already part of the fabric of the city of Columbia, South Carolina, and certainly additional companies moving in on a daily basis. So having said all of that, I didn't want to necessarily go into too many of the details. I'm going to kind of open up the floor for questions. Oh, let's talk a little bit about the use of the funds that we're raising. At this point, we pretty much fully committed on the deal, but we're still obviously inviting investors onto the deal because really the people who get to be part of this deal are the people who have sent their funds in. And I see some of you on the webinar, and I know that some of you have already sent your funds in. For those of you that have done that, I say thank you. For those of you that have already gone into our investor portal and have kind of gotten started with the process, but have not sent your funds in, well, you certainly still in play, and your spot is reserved until the deal is filled up. If the deal is filled up before you're able to send your funds in, I'll be more than happy to send your funds back to you. But my hope is that everyone that is gotten started with the process will be able to go with us on this deal. This deal is so exciting that we've had professional investors reach out to us and tell us that they're going to backfill whatever it is that we don't raise. So I'm sure that we're going to raise it, hopefully from our community of investors, but we are pretty confident that we're going to be able to close this. So this forum here is really to just educate you as much as we can, and hopefully answer any of your questions. And I will open the floor for that very shortly. The down payment is going to be $3.875 million. Closing cost is about $393 million. The acquisition fees, it will be $523 million. That's about 3% of the value, and that's completely standard for this types of deals. Value add cost is about $700,000. We have operating reserves of about $261,000, which protects us in case there are some surprise costs and expenses that prevents us from ever having to come out and do a capital call. And also our conservative underwriting is one of the other things that is going to protect us, because we know that there are going to be opportunities to quickly increase the revenue on the property and certainly start increasing the value of the property consequently. So having said that, I'm going to exit out of this and go back to the landing page, and with the hope of hopefully answering as many of your questions as possible in the time that we have together. So I think we have about 40 minutes. Braden, you can kind of get started with some of the questions you may have with you.
Okay. Talk a little bit about how our property in this same area is performing relative to the projections we had set out for it.
Yeah, that's a great question, actually. That's one of the most asked questions that we get from a lot of investors. So for those of you that do not know, about April, hold on a second, please. I just want to make sure that I'm stopping my share. So in April 2021, we bought a 132 unit Class C property just about 12 minutes away from this particular property. And we bought it for about $12.5 million. We were able to quickly implement our business plan and do some of the renovations that we promised the investors we were going to do. We renovated the pool area. And if you get a chance to, Braden, actually, you could pull that up. On YouTube, and just so that people could kind of see the renovations that we did in the clubhouse. We renovated the pool area, and we started to renovate some of the units. Our plan was to renovate about 88 units. We've been able to do about 14 of them. But that's just, we've not been able to do more than 14 because tenants are not moving. They're not moving from the property. They are staying put, and we need them to turn over the property so that we can renovate while we're turning over the property. Well, people literally are staying in these properties, despite the fact that we've been able to raise the rent by about $150 across the property. And then for the renovated units, we are able to generate another $150 in premium on those properties. So this is the Clubhouse Renovation. I wish they showed the pre before what you're seeing right now. It looks like something from like the 1970s before. And this is what it currently looks like. And we've even put in a spin studio. The tenants love it. And because of that, we've been able to attract even an improved quality of tenant into this property. And interestingly, we bought it at 12.5 million, 55 million in April 2021. And by November 2021, we did a broker's opinion of value just to kind of get a sense of what somebody will be willing to pay for it in November. And guess what? It came back as $17.5 million. Literally $5 million in value created in less than 7 months. If we were to do that right now, based on what the revenue is right now, it's probably going to be closer to more like $19 million. So we are generating this much value in a property just a few blocks away. And we have reasons to believe that this property is probably even going to outperform that one. So I'm super excited about the prospects of going into this property. You know, I think all the investors that have joined us on this are going to be very excited about this one. And this is definitely a good one for even a first-time investor to take on, because this is definitely going to yield that type of returns that you would be very excited about. So hopefully that answers the question, Braden. Go for it with the next question.
Yeah, did you see COVID affect the occupancy rates at all at any of the properties?
That is a great question. With obviously we got the other property somewhat when COVID was already some of the COVID surges already went by in April 2021. But certainly so far, COVID has not significantly affected any of our properties. Even with the latest surge, occupancy rate at the property 12 minutes away from this one has been 99%, or between 98% and 99%. This one has remained 99% throughout the entire time that we've put it under contract. And even at the peak of COVID in January and March 2020, the occupancy of this property only went down to about 91%, never went below that. So we have good reasons to believe that this is a very resilient property, and that this is one that is going to withstand any type of stresses that the economy may experience long term.
Great.
Any other questions? Go for it.
Maybe just your favorite part of the deal, whether it's in terms of the underwriting or on-site or you know, the projections, or what are some Julia's highlights on this deal?
That is a great one.
And we're seeing some of them as we speak. If you're,
I think one of the greatest highlights that we could that I even forgot to mention earlier was the fact that the taxes on this property are fixed. They are fixed until
2034. Yeah.
Yep, absolutely, because this is a property that is an historical property. And that's why you see we're never going to move that green entrance that you see. We're never going to move the logo that shows the names of the banks that existed in the property prior to it being converted into apartments. Because all those things, there are a few key things that we have to keep in place to maintain the historical significance of this property. And the roofs have been changed. I mean, have been redone when the place was when the property was completely gutted and renovated and converted to apartments. And we have at least a 15 year warranty on that roof. I mean, so usually those are some of the big expenses, right? The rooftop, we're going to be renting that to AT&T, you know, for about $3,000 to $4,000 a month, right? So that's another additional revenue. And let's assume the cap rate stays at 5%. So 5 cap. When you increase the revenue of a property or any business, or at least a multifamily business like this, you increase the revenue by $1. In the 5 cap market, you increase the value of that property by 20x, $20. So just the revenues that we're projecting to generate on this, we're going to increase the value of this particular property multiple folds, exponentially. And I'm super excited about the prospects of doing it. And I can't wait to get started with this property, close on it, and get started. We're on pace to close by the 3rd week of February. If the lender or the sellers don't slow us down, we certainly have fulfilled everything from our hand of the bargain, and we will have the funds ready to go when the time comes. But the only thing that may require us to push the close maybe into March or something is if there's a little bit of delay on the seller side or the lender side. So the loan on this particular property is a loan assumption. So we actually assuming a loan that was that already existed on this property, and the rate on that particular loan is about 4.3%, which is much higher than what we could get on the free market right now. So because we were willing to assume that loan, we obviously were able to negotiate down the price of the property to be able to buy this property at a 5 cap. A similar vintage property, a fellow Class A property on the market right now, will be bought at a 4 cap or less. And actually, there are other similar properties coming on the market by some brokers that we are very close to very soon, and are going to be coming on the market at about $200,000 or more per unit.
It's sent it to us already.
Oh, they've sent it to us. It's already gone to market. What was the price, Tenny?
No, it's off market. They've sent it to us already.
Oh, they've sent it to us already. Oh, great! At 200, was it? What was the whisper? $200,000 per unit. We're buying this property at $154,000 per unit. So the basis is super strong. We're going into this one with a lot of equity, and it makes sense that the professional investors are approaching us and saying, we want in this property, and whatever you don't raise, we'll backfill for you. But that's not all we created XSITE Capital for. We created XSITE Capital for the everyday investor, for folks like you and I that previously did not have access to these types of property. Our mission is to democratize access to multifamily real estate on this scale. And I would rather take people's, $50,000, $100,000, $250,000, like we have been getting from private individual investors, than take $500,000 or $1 million from a professional investor to fill this up. But the good news is, one way or the other, we are going to close this, and we'll take the group of investors that are ready to go with us and jump on this one. And for those that want to stay on the sidelines and watch, please be my guest. There will be another deal real soon for you to close. I know we are actively underwriting a bunch of deals right now, and the deal flow continues. And hopefully we'll have another deal to present to y'all really shortly, if this is not the deal for you. But this is one that I'm super excited about. I mean, I'm so excited about it. I'm taking extra money and putting it into it myself, as an individual. So because I want to grow my wealth too. So, but anyways.
So Julius, one other question that we received was when are you guys going to be distributing K1s?
Oh, that's a great one. So the K1s, for people that do not understand what a K1 is, the Schedule K1 is the tax document that you use to file your taxes. That's the easy way to explain it. It's going to have on it all your depreciation and paper losses that you can use to offset any passive income that you have, either coming from this property, other properties, or other passive income that you have, be it like a dividend income, be it rental income from any other sources, be it income from other passive investments that you have in other businesses. You could use the depreciation from this property to offset that. And how do we do that? After every deal like this, we invite a cost segregation expert to come in and depreciate everything besides the land and building. And essentially we get to take a lot of that depreciation and compress them into the first couple of years, or even you maybe even be able to take it right away at the beginning of the deal. So for your first Schedule K1, if you invested $100,000 into this deal, we expect that we should be able to give you about $60,000 in depreciation losses. You're making money, but on paper, it shows that you can actually take $60,000 of depreciation. And yes, it's deferred taxes. And if we ever sell this property, that you may have to pay some long-term capital gains on all of your gains or profits. But if we do go the secondary business plan of refinancing the deal, depending on what the market conditions are, that is a non-taxable event, and you wouldn't have to pay taxes on that distribution to you. So your first distribution will be most likely in the quarter following the quarter that we are in for the close. So for example, if we close this deal in February, your first distribution will be in the first 3 weeks of the next quarter, the following quarter after this one. And then you were asking about the K1s. The K1s usually go out sometime in February. So for those people that invested in the View, which is our property, which is just a few blocks away from this one, or 12 minutes away from this one, you be rest assured you're going to get your K1 sometime in February, so this month, so that you can.
That's great, Julius. You've literally answered like 3 other questions that we've received so far in that one.
That's
we
fantastic.
talked about cost seg, talked about K1, talked about distribution. So
beautiful. I guess I'm just in flow then, you know? Yeah,
you're on point, man. So if you don't mind, unmute yourself or type in your question if you have any. A lot of questions.
Actually, I just got an update that year 1 bonus depreciation will be $40,000 for any $100,000 investment, but $60,000 is what you can take over the duration of the deal.
Great. All right.
For $100,000 investment. Yeah. I mean, the power of cost segregation, that's COST segregation, cost segregation, because I know sometimes my enunciation is not perfect and people are confused about what I'm saying when I say cost segregation. So it's COST segregation. Look that up if you're not familiar with it. It's an amazing tool that real estate investors can use to significantly reduce their tax exposure, particularly when they have significant passive income.
Also, one other question that we got was, what kind of due diligence did we do on the property?
I think Lila is on the call, right? So, anyways, So we have these fantastic partners in First Communities.
Oh, Lila is ready to jump on.
Our property managers. Oh, look at that. Lila is on. Why am I even answering this question? let me let Lila go for it. You know, Lila, why don't you go just give us a little taste of the kind of due diligence that we do on this properties.
Absolutely. Thank you for having me tonight on the call. So again, my name is Lila Scott. I'm the Regional Vice President for First Communities Management, and we manage for XSITE Capital. Our due diligence process is a very thorough due diligence. We did 100% unit walk, 100% file audit. We use a company called Happy Co, and it takes all of the data that we put into it. We list everything. We take all the information from every file, as well as demographic breakdown, income breakdown, credit scoring breakdown, and we compile that into our format and provide detailed spreadsheets and reports to XSITE so that they can get a full understanding before they complete their underwriting. As far as our due diligence in the actual apartment homes themselves, we check out everything from the flooring to the ceiling, behind the walls. We look at electrical, plumbing, HVAC systems. We go through the entire buildings from the roof to the basement, and we compile a detailed report to let them know any potential areas of concern, anything that we will need to tackle right away, such as Julius mentioned earlier, the one elevator that's a little finicky that needs to be repaired. And we plan for that and obtain estimates from the beginning. We call in a general contractor, sometimes an engineer if needed, as well as specialized contractors for roofing, elevator repairs, anything like that that may be needed, so that we can make sure that every aspect of that building, from parking lot to the basement, is covered and checked prior to going into an underwriting.
Thank you so much, Lila. I mean, that is an incredible detailed response there. And for those of you listening, I think you can get an idea just from what Lila said about the significant granular details that we go into when it comes to our due diligence on these properties. This is how we avoid any surprises. We dig deep and we underwrite conservatively. And so far, it's been a fantastic approach for us, because with that, we're able to underpromise and overdeliver. Any other questions?
Lila, you're the property management company. You were the representation of the management company. What do you really like about this asset that you think is going to be a good investment for XSITE Capital and our investors?
Sure, absolutely. So when we are presented with a deal to look at, after we look at the due diligence packet that we go into, we have an idea of what to expect. By being able to see that the demographic here has such great income, majority are in the medical field. We know that regardless of anything that happens economically, everybody's always going to need healthcare. That's a win for us. The unique approach and the uniqueness of this historic landmark in Columbia, South Carolina, speaks for itself. The favorite part of the deal for me is just the history that is enriched and captured in this asset, and people are drawn to that. The marketability of this property is superb compared to anything else in the market. A regular multifamily, it's not a brand new mid-rise, it's a historic value to it, and it's unique. Every single floor plan here, even though it's similar, has its own uniqueness about it due to the structure of the buildings that have come together and the history that's there, from a standpoint of it being an old bank that's been converted into loft apartments. So from an investment standpoint, knowing that the marketability and the demographic breakdown of the resident base here is going to be those that are going to continue to pay rent and not really bark at any type of increases that we pass their way is a true sign for investors to say, give me your money. Where do I sign?
Yeah, thank you.
Much, Lila.
That's a great
Well,
answer.
take it over, Chairman.
Yeah, thanks. Really appreciate it. I mean, those are great insights, Lila. Absolutely. And this is why we are super excited about this deal. And I mean, you guys have done such an amazing job with the view. And I think over 60% of our view investors are on this deal. They are super excited. They're like, yeah. And a vast majority of them have either doubled or in some cases tripled their investment in from the view to this one. So I think we've gone away from where investors were trying us out and just giving us our average investment when we started was about $50,000. Now it's much higher than that. So we thank our community of investors for that vote of confidence. That is really been our secret sauce to the incredible growth we've experienced in the last 2 years, and certainly going to be our secret sauce moving forward into the future. So thank you so much for all of you who have believed in us and continue to believe in us. Thank you, Lila.
Any additional question from the audience? If not, I'm just going to continue to ask you, Julia, some of the questions we received. One other one that we got was, I know you had mentioned this when you were showing the slide.
Mm-hmm.
Can you share with the investors what your business plan is when it comes to adding value to the property? Because it's important to know that we're adding value to the community, because the business plan is, increasing rate at some point. So can you share with the investors what that is?
I see. So I will even dial it back a little bit, because I see there are some people on the call that may not necessarily know how this works. So XSITE Capital buys stabilized properties. And for those that don't know what that means, it really essentially means properties that have at least 90% occupancy, and they just need a little bit of oomph to kind of get them to the next level. So XSITE Capital takes properties from one level to the next level. That's one nice way to to explain it. So we identify properties that have relatively below market rents, that also presents opportunities for us to add some significant value to, that the tenants are going to appreciate enough to be willing to pay just a tiny little more, or a little more, and help us increase the revenues on the property. And typically what that takes the form of is unit renovations, taking units from classic units to more modern units or contemporary units. But in this particular case, this is a relatively new building. These units were just converted to apartments in 2016. So all of the vintage is still very nice. I mean, it's still very high-end with the finishes and all. So there's no need to do those updates. That's why we're taking it from the 2016s to the 2022s by updating the units to smart locks, with smart locks and smart thermostats, to really match the aesthetics of the young people that predominates in this particular building, right? And in addition to doing that, we're going to add a dog park, a dog washing station. We're going to renovate the pool area and make it look nice, take it from 2016 to the 2020 to 2022. And make it look really nice, and make it like a hub of activities for the tenants that want to utilize it. We're also going to add some self-storage spaces in the dead spaces throughout the building, and also going to put in a co-working space, so that for people who want to get out of their apartments and go work within the building, but in a dedicated workspace, they are able to do that. All of these things will give us opportunities to increase the revenue on the property, but And with Lila, Scott, and our team on our sides in First Communities, we are going to optimize the operations of the property and hopefully reduce the expenses. And for a lot of you on the call, when you increase revenue and you decrease expenses, what you do ultimately is you increase the net operating income of that property. Increasing the net operating income increases the ultimate value of the property. And that is the play here. That's what we're going to do over the years that we're going to be holding this property.
So much, Julius, that's outstanding. We have a question from Brian. He's saying, how could the possibility of increased interest rates affect the marketability of this property in 7 years, or cost of refinancing if that option is chosen?
That is a great question, Brian. Fantastic question. And yes, interest rates are not going to stay low like they are. Even the Feds are already signaling that in 2022, they're probably going to increase the interest rate to combat inflation. And that is a reality. And that is something that we already underwrote into our, already included in our underwriting. We are assuming that interest rates are going to rise and that potentially cap rates are going to potentially trail it. But when you actually look at some of the leading real estate economists, people like, when you read the Linneman letters and you listen to some of this top economists, they actually think that the cap rates are potentially still going to stay compressed over the next 3 to 7 years. That's what they're projecting. And they have good reasons to believe that. The US have a shortfall in supply of apartments of about $4 million. I said $4 million, 4 million units. So development is not happening fast enough, right? And so so there's like this demand supply dynamic that favors like businesses like this, like the multifamily real estate, in the sense that rents may not continue to go up at the pace that they've been going up, and the rent increases may eventually slow down or stay flat. But we do not believe that rents are going to actually come down because of the demand supply dynamics. Also, there's a glut of money still sitting on the sidelines. So the US is significantly capitalized right now. And we've not even talked about international money that kind of stayed out during the COVID era that are going to come right back in once travel kind of gets back to to the full scope of things. So with the amount of capital sitting on the sidelines and the relative stability of multifamily through all of the economic downturns that we've seen in recent times, this is a very attractive asset class, and everybody's going to be investing significantly in it. What that means is that is probably going to keep the cap rates relatively low, despite the increases in interest rate. So yeah, so you asked me, Brian, how that is going to affect our business plan. I do not have a magic 8 ball, or what do you call those?
Crystal ball.
A crystal ball. Sorry. So I do that, I do not know where the cap rates are going to be when we exit this property. But we did underwrite this property to exit at a cap rate of 5.7. A similar vintage property right now is being bought in Colombia at a 4% cap rate or less. So if you compare it to just the market cap rate, we're underwriting this deal at a basis point that is like 170 basis point over what the current market is doing. That is unheard of, really. There are people underwriting deals right now at flat cap rates. And we never did that. We usually do at least 50 basis point. But we're not doing that. We're underwriting at 170 basis point higher than what we currently are on. So if the top economists, real estate economists are right, and the cap rates stay flat at the exit for this building, then you guys are in for a ride, and you're going to be loving it. For those of you that have invested, including Brian, who asked that question, thank you for your investment, Brian, and I appreciate the question. But if we are right, and with our conservative underwriting, and the economy gets a little worse with regards to the interest rate, and the cap rates kind of follow and trails the interest rates in an upward direction, then we would meet the projections that we have promised you. And if we were just slightly right, and the cap rates actually got worse, and we actually sold this at a 6% cap rate, guess what? We still give you a 2x return on your money. So if you invested $100,000, you will still make $200,000 in that doomsday scenario almost. So
Julius, we only have about a little over 5 minutes left, so I was thinking I could play this. I know a few people on here are joining to see to have a little bit of help about the funding process, so I was going to play this video.
Got it. Well, I get too excited about this, so I just can keep talking about this all day. But
that's what we call you the chairman.
Braden, thanks for bringing that up, and please take it away. Thank you.
To invest, they can go ahead and click the invest button to jump right into the investment process, or they can click view details to see.
Are you sharing the video?
Braden, we can't see the screen if you're trying to share a video.
Whoops.
Process. So here on the invest page is where they'll see the opportunity to invest. They can go ahead and click the invest button to jump right into the investment process, or they can click view details to see all of the details and documents. Here they click the invest now button in the upper right corner to jump into the 4-step process. The first step, they're given all of the documents. They can download all of the documents with one click. They certify they have the necessary information, and they continue. By default, each investor has an individual profile, and they can place investments under that, or they can add new profiles for things like LLCs and IRAs. They then determine how much they'd like to invest. They sign the document at this step. This is the e-sign template that you had created. This is also mobile friendly, so your investors can submit investment requests on their mobile phones. They click get started. They fill out the subscription agreement. Once they have completed all of the fields that you have set, it's very clear. They click continue and I agree. This document is then saved on their dashboard. It's also saved on your admin login as well. If you need to sign, then you'll get an email notification to countersign the document. At this step now, they're at the funding instructions, fund investment here. This will display exactly the instructions that you have put in the system. So if you're accepting wire transfers and or checks, these details are here. These details have also been emailed to your investor at this point. They can also print or email these instructions here on this page. We're going to go ahead and ask them how they plan on funding. If it's a wire, we'll ask when they plan to wire. If it's a check, we'll ask when they plan to mail the check. So here, the investor will submit. All of these details will be available to you on the admin side. This now sits as a pending investment request. As long as the investor has a pending investment request, every time they log in, they'll be redirected to this page. They can view the funding instructions. This investor did sign. If they had not signed, then there would be a button to complete the signature process.
Awesome. Thank
Small
you.
businesses still wasting value.
Thank you so much, Braden. That was really helpful. And I think we're coming up on time. Really appreciate you all still staying and engaging with this material. I hope we were able to communicate our excitement about this particular project. And for those of you that have invested, once again, we truly appreciate you. And we look forward to continuing on this journey with you. For those of you that are still on the sidelines, still trying to figure out if you want to jump in, even though we have commitment to fill the deal, it's not too late. You can join us. As far as you send your money and you're able to go through that process that Braden just sent in, you could still leapfrog some of the people that are still dragging their feet on the deal. You could still join us. All you need to do is express your interest. Reach out to any one of us. My email address is juliusoni@xsitecapital.com. Braden, if you could just put your email also in the chat,
Yep.
so that people can have access to that and reach out to you. And also, I think we just put in the link to the Groundbreaker website. Groundbreaker, I said, our Investor Portal website. The Investor Portal is where you actually go to create a profile and initiate your investment. So feel free to do it on your own. Feel free to reach out to us and we can help you facilitate that investment. Either way, we welcome you on this investment opportunity, and we certainly look forward to growing with you as we bring more and more of these properties to your awareness.
And if any of you know anyone who'd be interested in whether it's land bank or just the work that XSITE is doing, we'll be sure to circulate a recording of this video afterwards via email. So you can send them any of the links that I'm sending in the chat with the landing page or the offering, or just a recording of this presentation. If they have any questions, just have them visit our website. And if they join the club, they'll be entered to start receiving communications and educational material from us. So
that's a great addition. Thank you so much.
You got it, boss.
Really appreciate it. So yeah, so it's great. Well, I think with that, we're up on time. I know you could be everywhere else in the world, everyone that joined us, but you're here with us. We don't take that lightly. We don't take that for granted. We really appreciate you. We look forward to continue to partner with you to grow your mind and grow your wealth. And we look forward to doing this deal with you and future deals with you. So thank you for joining us today, and look forward to going on this land bank loft exciting journey with you. Thank you.
Everybody, take care.
Take care now.